Oi!
My name is Nick Halaris, and I'm a real estate investor and developer here in Los Angeles. I kind of came into this career by accident. When the housing bubble was raging here in the United States, I too got caught up in the speculative fever and ended up owning something like 15 rental properties all across the country. When the crash hit, I found myself in a terrible financial position, but I was determined to find a way out of it. While the bubble and the crash ended up being a good thing for me, for most American families, it wasn't. And so this idea of a housing bubble is something that's always at the top of my mind. Recently, I've become concerned about the possibility for another housing bubble. If you take a look at something like a Case-Shiller index for any city in North America, basically, the prices are approaching, in some cases exceeding, the levels reached during 06-07 when the whole world was in a bubble. One of the things I've learned over the past 10 years investing in real estate is that to answer a question like, is there a housing bubble, there's really no substitute for on-the-ground research. Vancouver is a city that's become famous over the past few years for its real estate market. I'm here on the ground to look into the individual transactions that are driving this market. Who are the buyers? Who are the sellers? What are they thinking? What are their motivations? What kind of expectations do they have? I'm going to meet with local real estate agent Steve Soretsky to try to get a sense for the types of transactions that are driving this market. Hey, how's it going?
Yeah, good to see you.
Nice to meet you.
Yeah, likewise.
So where the hell are we?
Yeah, so we're basically about 10 minutes outside of downtown Vancouver. So this is considered like a wealthier neighborhood, a little bit bigger lots. It's called the Shaughnessy area of Vancouver.
And what is this thing?
Yeah, so this is one of the houses that I really wanted to show you. It kind of exemplifies like everything, all the speculative activity and the peak sort of frothiness in our housing market. So this is about a 10,000 square foot lot, which is considered quite large for Vancouver. So this house sold in 2014 for $5 million in January. And then later that year in 2014 in November, it sold for 5.5 million. 2015, it sold for 6.5. And then in 2016, it sold for 7.6. So you can see each year basically went up like $1 million without doing anything, because each owner left it empty. They didn't do any renovations to it. It's basically like they held it for a year and sold it.
What does a new construction home on this street sell for? Like if you actually tore this down and built a beautiful home here?
You could probably get like 8 or 9 million.
Okay.
Yeah.
Wow.
Depending on
who's living in that?
That's usually like what we, a lot of the times you see is, we call it sort of like satellite or astronaut families, where it's like a mom and like a daughter or son that are going to school here, and the dad usually lives overseas in China. As we really got into like the end of 2015, early 2016, we were seeing 10 offers. We were seeing some single family homes getting $1 million over the asking price. So I think that was when it was just like, okay, like something's really going on.
Something's up. Were you, these circumstances back then where you had this crazy bidding and the prices going up, were you representing clients who were trying to purchase these properties and just got priced out of the game because they weren't being aggressive enough?
Yeah, definitely. Had some families, that had sold, basically waited sort of 6 months to see how the market would shape up, and then just like that, prices shot up 20% in those 6 months, and just like that, they were priced out, and still today trying to get back in.
All right, man. So tell me, what are we looking at here?
It's just a under construction building. Had some clients that bought into it as a pre-sale, and then they flipped it as like a assignment contract. That's what it's called.
And what does that mean when you say like they bought into it as a pre-sale? These are individual units or this whole development?
So they basically bought like a unit in this development. You usually pre-sell these about 2 to 3 years out. It's basically to finance the project.
I see. So the developer does a pre-sale prior to the construction being finished?
Yeah.
And then you're saying that there are people who are then selling those once again prior to the building being done?
Yeah, so basically what happens a lot of times is we see like people buy into these pre-sales and then they don't really have any intention of like living in them or really owning them. Basically they buy in with the developer and then they wait for the market to go up, and then over the 1 to 2 to 3 years, and they flip that contract to another buyer before the construction's complete.
I see. And are they making money? Like, they're making a big return on this?
Yeah, so my client bought in, it was like a 3-bedroom a couple years ago for like $1 million. And then they recently just flipped it for about 1.5.
Wow.
So.
And when you buy in the pre-sale, do you have to actually consummate the transaction and get a loan and do all that, or are you just putting a deposit down?
Yes, you have to put down, generally what they do now is about 20, it used to be about 15%, now they've upped it to about 20, 25%. So you put down basically a 25% deposit over like a 1-year period, and then you basically have another 2 years to get your financing in order and all that stuff.
I see. So in the case like the example you gave me, somebody could literally put in $250,000 and walk away, you know, with $600,000 or $700,000.
Yeah, exactly. Basically just you put down a little bit of money. It's like, it's probably the most lucrative speculative play. Like if you're gonna like bet on our housing market, like this has been the area to do it.
That's amazing.
Because you really don't even have to be like fully qualified, right? Like you can just, as long as you can scrounge that money together and let the market do its work.
How prevalent is that around in these developments? Does it happen in every one of them?
Yeah, pretty much everyone now. I would say it's become more acute over the last couple of years, particularly just because people have seen like how much money these people are making in these pre-sale markets.
Yeah.
And they think the market's just gonna keep going up, right? So like, well, let me put down this 20% and let the market do its thing.
What happens to you if you're the person who buys the pre-sale? Let's say you bought the first one for $900,000, and then you assigned it to somebody for $1.2 million a year later, and then they don't close.
Yeah.
Is the original person still liable to consummate the transaction?
Yeah, and that's like one of the things that I'm sort of concerned about is basically the original purchaser is on the hook, right? So if that person flipped it to someone, and the person who bought the flip, say then flips it to someone else, and one of those people down the line doesn't close the developer, it actually originally comes back to that first purchaser.
Wow.
I started off in real estate about 14 years ago, and then since then I've been acting as the Senior Development Manager for Bucci Developments, who's a local Canadian developer who develops in Vancouver and also in Calgary.
So what's your take on this market?
I think it's a really interesting market. There is long delay in product supply, which is causing constraints, which is resulting in the increased demand. Multifamily projects that are coming to market still have people lining up outside. You're seeing projects launch where there's 200 or 300 units and they're selling still at record pricing, and they'll sell out in 2 or 3 days. At the end of the day, whether you're looking for a condominium, a townhome, or a single-family home, I think the condos are still very, very hot. In the last year to a year and a half, they've generally appreciated in Metro Vancouver about 20 to 40%, just depending on where they are, which neighborhood, which location. The townhomes have appreciated probably anywhere between 10 to 30% in the last year.
When you think about a condo in Vancouver, would you rather be a buyer or seller in this market?
I think that I'd prefer to be a seller, and the main reason being is because the price point at which you can sell a condo at and the level of demand. My understanding is that most condos that are selling at a given price point are receiving maybe 10 to 15 offers, if not more, just because there's such a demand for condominium housing right now. So yeah, I would much rather be a seller right now than a buyer who's struggling to find a place at a price point that works.
Yeah, so I wanted to bring you here because it's basically like the east side of Vancouver. It's more on the outskirts. It almost borders Burnaby, which is like the adjacent city. It's basically very family oriented. You get a lot of renters. Like none of these houses are going to be like vacant. So this is more so like, yeah, what you typically find for people that are just here working hard and trying to afford like a single family home.
I see. And what would something like this sell for in today's market?
I mean, they have this one listed at like 1.3 million. So it's like it's a smaller lot.
What are the stats on this one? Like how big is it?
Yeah, it's a 3,500 square foot lot. This one's kind of unique because the house is only 650 square feet, but it's like a 3-bedroom.
Wow.
So I don't really know how they make that work, but basically I think what's going to happen is someone will come in here, they'll buy it, and then they'll plan to tear it down and build something new. But basically, the way I look at it is like the lot value for something like this is really about 1.1 million. And again, it's on the outskirts of Vancouver. Like, we have a very noisy, busy highway behind us.
And is this common, like, to see a property of this size and scale in this neighborhood selling for over $1 million as a teardown?
Yeah, this is like completely normal. Like, the typical teardown around here is like 1.1, $1.2 million. Because this is a little bit smaller lot, closer to that busy highway, I see it around 1.1.
I see. And what's in it for the group or the individual buying this and doing the teardown development? Like, are they going to make money on the transaction? Are they going to be able to build something and flip it? Are they going to live in it? What is the most likely thing to happen here?
I don't see it as like a speculative play. I see this more as like a family looking to sort of set its roots and live here for the next, 5, 8, 10 years. And really raise a family, because this is like one of those more affordable areas where if you're trying to buy a single family home, like, this is kind of where you're gonna get your feet into the market, so to speak.
And what about like the house? Like, let's say you were able to build a 2,500 square foot house here. What would that rent for?
The full house?
Yeah.
You'd probably get, on the high side, maybe $4,000 if it's a newer home.
I see.
Yeah.
And so, like, if you looked at the mortgage cost, so your estimate was what? Like, it was going to be worth roughly 1.5, 1.6 if it was finished.
Yeah, I think the time you buy the lot for around 1.1, throw in a new house on there, yeah, you're probably looking at least 1.5, 1.6. So.
And so 4,000 a month is not going to cover the mortgage.
Yeah.
Probably.
No, definitely not.
I see. And these all have basements and stuff, and so on this neighborhood.
Yeah, it's almost all basement suites, just to support that mortgage. But as like an investor, it's usually you're looking at it as like a long-term play, being like, okay, I'm probably going to lose money on this every single month, but the value of the land is going to keep going up, so that's where I'll make my money.
So how long have you been in the mortgage business?
So in the States, I did mortgages for about 7 or 8 years with various lenders, and here in Canada, just a couple of years. However, I've been in real estate investing for the better part of 20 years, and I'm still currently involved in real estate projects in Florida. By the way, Nick, the views I express here are strictly my own. They're not the views of my employer, TD Bank. I believe that the underwriting standards that I apply in my day-to-day operation, and the framework that the bank has set up for me, are rather stringent. The people who get qualified go through rigorous research in order to get qualified for lending. Now, can they sustain a shock of interest rate increases? Are they able to sustain a shock of losing a job or any kind of exogenous shock? That is yet to be determined, because in my day-to-day operation, I quite often interact with people who have the expectation that home prices will always go up forever, indefinitely into the future. And the general expectation is also here in Canada that they largely sidestepped the US recession of 2009, and they're able to learn from our mistakes in the US and do things better, smarter. And what happened there will not happen here. So there is a little bit of how should I say, complacency to some potential risks that I see. Payments are priced for perfection, and people's lives are priced for perfection. We review income on a daily basis, and we see it, that people are taking on quite a bit. And can they withstand any shocks? That is the question for me.
When you're underwriting someone using a home equity line to provide the down payment for another property, how does the bank look at that, or how does the Canadian system look at that?
Well, home equity line per se, you're not able to take a down payment and put it as a home equity line, so to say, per se. But
you have to use it. You have to take the home equity line for some other reason.
Exactly.
And then what you do with it.
You're not able to go in and buy a property and say, I'm taking this as out of my home equity line.
But when you think about it from an underwriting standpoint, isn't it pretty obvious though, looking at the numbers? Let's say someone has an income of 100,000 and then all of a sudden they have a $200,000 influx into their checking account and then they use that $200,000 to acquire a property. Isn't that pretty obvious to see through?
No, well, there are ways to verify that. The banks are looking for back statements and where the money came from. You know, they're looking into these things. But the bottom line is that home equity lines sometimes do get used for purchase of new properties.
I saw a lot of really interesting things in Vancouver, but I think it's still too early to pass judgment on whether or not there's a bubble there. I decided to jump across the border just a few short hours and come to Seattle, another booming real estate market. Hey, how's it going?
Hey, hi Nick, how are you?
Not bad,
Nice,
you?
nice to meet you.
Nice
I'm Jana
to meet you.
with John L.
Thanks
Scott.
for meeting me here.
Thank you.
What neighborhood are we in?
Right now we're in the Admiral area of West Seattle.
Okay.
This is one of my personal favorite neighborhoods. You've got wide streets and vintage homes, walkable to parks, and California Avenue's not too far away. Alki's just down the street. So there's a great kind of revibrance happening in this area.
Is this your listing or
No,
is it?
this is not my listing.
I see.
This home just came on the market. It's actually a bank-owned property.
Okay.
And we were hoping to see it this morning before it sold, but the market's so crazy it actually sold before we got here.
It's sold already.
Would you like to see inside?
Yeah, that'd be great.
Let's check it out. So the home was built in 1907, and it's 1,170 square feet.
You said this is an investor deal?
Well, it'd be perfect for an investor because it's ready for some improvements.
It's got that great old home smell.
Yeah, doesn't it?
It does, yeah.
So in many markets, you would expect more for $500,000.
I know, right? Yeah, you walk in here and this is definitely like unrenovated, untouched for years.
Yeah.
Yeah.
It's ready for somebody to come in with some vision.
Yeah, seriously.
It'll be fun to see what somebody does to it.
You said 1907?
Built in 1907.
Yeah. That's very, very interesting layout.
Most of the homes built in the West Seattle area are what we call war boxes, built right after World War II. Most of the inventory in this area is, you don't have the features that this home offers. So a lot of people would flock to this home, and this area is particularly because this was an older neighborhood, and you have the craftsman style home and features that you don't get in those war boxes from the 1940s.
I see.
And then we could go up the Billy Goat stairs if you were really adventuresome.
I want to check it out. Let me just see what's up here.
You can see why we call them Billy Goat stairs.
And what, are these supposed to be bedrooms?
Yeah, they are. So anybody looking at this home would be curious about inspections, and I can tell you that most buyers in this market are waiving inspections.
Right.
So,
why is that?
Well, it's really difficult to make an inspection anything other than subjective. And so if you're working with a homeowner who's selling their home, they have 5 offers to choose from. They don't want to take one that's not solid and turn away those other 4 offers. And so in order to be competitive, you've just got to take the risk.
Yeah.
So Nick, thanks for joining me here in Columbia City. This is one of the hottest neighborhoods in Seattle right now. It's kind of going through a transitional phase.
Is this a market where there's end user buyers or investors or both?
Both, mostly end users. The traffic that is coming here, the buyers that are coming here are looking for easy access to transit. And of course, that's going to attract your investors too. But once again, we're working with escalating prices. That makes it hard for investors because the investors always have to have that profit.
I see.
Where we have a lot of home buyers who are just desperate to find a house to live.
And what are these things trading for?
Well, so this last home that we passed recently sold for $691.
Yep.
This one right here sold for $635.
Wow.
Very recently. We have another one that's recently sold for $505, and then the very last one sold for $700,000 on
This
the
is
street.
all within like the last year or something like that?
Yeah, all within the last 6 months.
Wow. And what was this market trading for like 5 years ago or 10 years ago?
You could have picked them up very inexpensively.
Like half price or?
Even less than that. This area
Wow.
is really, really skyrocketed. In the last year, the median home price was $450 in this zip code, and today we're at over $560
Wow.
in just a year. We have a supply and demand problem. So what I mean by supply problem is in King County, we have 1,500 homes as of January on the market. That's condominium, single family homes, that's everything. Do you remember me telling you 200 people are moving into Seattle a week? So we don't have enough homes for the people that are moving in, let alone for the people who are here trying to buy their first home.
Right.
So unless something changes with supply or demand, I don't see a change in the rising prices in the region.
And are developers, local developers responding to this demand?
Well, they're certainly trying to, but the problem is there isn't a lot of opportunities to build big developments. So some builders are doing what we call infill. The challenge in a market like this is that developers will build to the highest percentage. I mean, that's where they're going to make their best profit. And if the demand meets it, they only need to serve the top 10% of the market, which is luxury homes.
This is a 2-bedroom, 2-bath, 1,100 square foot condo that they built so that people coming in and buying in a pre-sale can see actually what the product's going to look like once it's done. What you see out here through the windows is what the view will be like, and this is about the 30th floor. So it's pretty accurate to give you an idea of what your orientation is.
I see. And what do you think a property or a unit like this in this building is going to sell for?
For what's remaining, this unit is going at about $1,399,000.
Okay.
It's just under 1,100 square feet, so.
And what would a unit like this in today's market rent for?
Oh my gosh. Units in the downtown market are averaging about $350 to $450 a square foot. And so a unit like this would probably be about $3,800 to $4,000 a month.
And would that be enough to cover the mortgage?
Hopefully.
All right. So one of the things I saw in Vancouver was this activity where people were sort of speculating on pre-sales. Mm-hmm. So one individual would buy into a condo pre-sale and then flip it to another one. Uh-huh. Is that happening up here?
It does, yes. Because you're buying at, say, today's price, 2018, 2017 price, and in 2 years, what we're seeing is 14% gains in our market year over year. So absolutely, we'll see a ton of resales once the project is complete.
I see. And are these resales happening after construction is complete, or are they happening in between?
No, they'll happen after it's complete.
Okay, so they're not doing this assigning contracts and stuff like that?
No, the contracts aren't written that way. But right now, because there is no inventory, we're seeing just a frenzy on every single property.
So it's been a very healthy apartment market. Condominiums have been grossly underrepresented. We are experiencing lineups around the block when we have offerings of new developments. There's a real supply and demand imbalance here in downtown Seattle. Condominium owners are condominium prospects are very eager for new inventory, and there's just a real lack of them. So the last couple of projects, including the one we're in here called Nexus, as well as one we just recently launched called Coda, drew lineups and even overnight campers to position themselves for first reservations.
I used to live in Belltown, in this part of town, and when I first moved to Seattle over 10 years ago, this is where I lived, and now I live 12 miles out because I've slowly been priced that far out of the city.
Wow. Do you have friends that have just given up on Seattle in general and moved somewhere else?
I have friends that have left Seattle or sold their houses because that was a good financial move for them, and then have went to other parts of the country.
So what are you doing in this part of town today?
I'm a professional dog walker.
Oh,
so
nice.
All my clients, this is the only area I serve.
In your day-to-day, do you come across people who are trying to make investments or speculate around town?
Absolutely.
And what is the profile of the typical group or person doing that?
Well, there's a couple of different profiles. We're seeing quite a huge influx of Chinese buyers coming in, and they'll come in sight unseen, they'll buy a property, all cash, and they're basically buying it as a holding. And what I mean by that is they've got younger children and they want a good education for their children. So their children might be, 7, 8, 9, 10, and they're gonna hold it for about 10 years until that child is ready for college, and then they'll bring them here for college.
So that's more of like not a flip strategy, but
Not a flip strategy, but definitely an investment strategy.
investment strategy.
Now, on the flip strategies, we see people purchasing homes that need to be remodeled. So they'll go in, buy them pretty much at a lower price, and go in and just give it a facelift. And what I mean by that is new kitchens, new baths, new flooring, new paint. They'll basically flip it for about double what they paid for it.
I came across some articles talking about this phenomenon where buyers were increasingly coming to the table with sort of all cash, non-contingent offers immediately. Are you seeing that up here?
Yes, cash is always king. What we're finding in our multiple offer situation is people waive everything. They waive inspection, they waive title, they waive finance. They'll still include a finance addendum if they're getting a loan on it, but they waive everything. They waive the appraisal. They waive everything.
Wow.
I mean, they come in with absolutely no outs.
So people are having to come to the table with a non-contingent offer on day one. No ifs, ands, or buts about it.
Absolutely.
And is that happening all across the city, all over the place?
Pretty much, yeah.
And when did that start happening?
That started happening about probably a good 10, 12 months ago.
And what do you think about that?
It's great for the sellers. It's definitely a seller's market. I've had one purchaser, or one buyer I should say, that I've worked with for the last 3 months, and they're a previous client. And we've made 8 different offers. And we're not all cash. We've got a strong down payment, 20%. We go in and we waive everything, and we're still not getting it.
So do you think there's a bubble up here in Seattle?
I do. And that's just my personal opinion, but we just keep thinking it can't keep going like this. The prices just keep increasing, and we've seen it before, but I just keep wondering if we can keep sustaining this.
Okay, Zizi, so what do you think of the housing market here in Seattle?
I think it's shit. Regular people can't afford to live here anymore. The percentage of rent that you pay for how much you make is absurd.
I see.
People can't live like that.
Are a lot of young people struggling with this?
Definitely.
Are people having to resort to having a bunch of roommates and things?
That and what they're doing a lot is moving back with their parents.
Okay, and living
I'm lucky I didn't have to do that because I have friends, but not everybody's so lucky.
I'm back home now and about to sit down with legendary real estate consultant John Burns to discuss with him what I saw up in Seattle and Vancouver.
So you picked a couple doozies. Seattle's had the most price appreciation in this cycle by far. What's going on in Seattle is real job growth by real companies that are making a lot of money, with Amazon and Microsoft really leading the way. And the consumer there is very exuberant, like home prices can only go up. And I believe Seattle's a permanently more expensive place to live because the game has been changed there, particularly by Amazon. What I struggle with is just how much more. Is it permanently 10% more or 20% more? And that's a really tough decision. Well, what we're doing in markets like that is we're monitoring job growth really carefully, because I think that's how the game ends. It's not due to rising interest rates or anything along those lines. It's due to a recession. And the more overpriced a market is going into recession, or the more overbuilt a market is going into recession, the harder the recession is.
So are there signs of a housing bubble in North America? I definitely saw some things that concern me. There are clear signs of speculation. Houses are trading at values that don't seem to make sense given their location and their physical condition. In Vancouver, I saw this interesting phenomenon of people speculating in the condo pre-sale game. So essentially buying into a pre-sale and with no intent of ever moving into the unit and just trying to flip it to the next buyer. But there were some things I didn't see as well that I would have expected to see. For instance, and perhaps most glaringly, I didn't see a sign of clear mortgage excess. That was a key feature of the US bubble a decade ago. Lenders were handing out money famously to people with no income, not verifying anything, and I didn't get the sense from my conversations with people on the ground that that was happening. Another thing that I expected to see but I didn't see was the people in between all these transactions, real estate brokers, title officers, mortgage brokers, to be making obscene amounts of money. That was definitely a feature of what was happening here a decade ago, and I didn't get that sense at all in either Vancouver or Seattle. In Seattle for sure, and here in Los Angeles, and maybe even Vancouver, consumers were reacting maybe somewhat rationally in response to market conditions. Yeah, there's this fear of missing out, motivating transactions, but maybe it's rational. There seemed to be a real supply constraint, especially in Seattle and here. I heard from developers that it's just really hard to get new product on the market. But that leaves me with another question, which is the question of affordability. And how much farther can prices and rents go up? Is there really that much room left to squeeze in this market? Wages definitely aren't keeping up with appreciation in home prices and rents, and I think that's a problem. I'm Nick Halaris.